Welcome to Money in Motion by Trade the Chain. If you want more from CJ and Monte, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description.
Hello, everyone. Good morning and welcome to another edition of Money in Motion. Today is Thursday, September 12th, 2023. Monte and I were kind of joking. We're not really going to talk markets. We're just going to talk about movies today. It's one of those days, isn't it?
It does feel like that. I mean, you know, it's tough to, we talked about this yesterday too. It's tough doing a show at the start of the day, right? Like the market could easily reverse, but today I'm not too enthused by what I'm seeing across the board. That being said, we'll dive into it and we'll talk about why. But yeah, good morning all. Good morning, Ross. Good morning, Phoenix. Good morning, Keith. Good morning, Jenna. I hope you all are doing well. And yeah, I mean, without further ado, CJ, is there anything you'd like to start with today?
Yeah, I mean, I guess I just start by saying that Mondays and Thursdays historically are the worst performing days. Thursday is the second worst historically performing day aside from Monday. So I feel like sometimes you always get these weird turnarounds in that points also kind of coming up to some local resistance. But, you know, the CPI came in today. It wasn't really hot, but it was a point or a 0.1% higher than the expectations. And instantly, you know, we got a pretty quick sell-off and have been pretty much down lonely. Well, actually, never mind. We're coming back.
Yeah, we are coming back.
So it's like the same thing as yesterday. Like we
Yeah.
sold off initially after the hot PPI, and then, you know, bulls bought it back up. So it's tough to say here at the start of the day.
I'm bullish. I'm just going to go ahead and say it. I don't know why I'm saying it like it's like some bad thing, but you know, we talk about narrative failures all the time and news failures. And I think that when you have, you know, CPI coming in a bit over expected, like you said, not hot, but warm, as someone on Twitter put it, as you said. But, you know, that I think classifies as a narrative failure if we have the NASDAQ pumping. And the NASDAQ is doing exactly that. Taking a look at the 15-minute chart, of course, at the market open, there was some sell pressure, but that's getting faded really quickly. And we're, you know, from a 15-minute perspective, looking very good on the day. So I would not at all be surprised to see, basically, if we're looking at this from a daily perspective, you know, continuation to the upside for the NASDAQ. And I would say you could even say the same thing about the S&P. We talked about this gap that needs to be filled. I think that this could be the chance for it to fill that gap. The DXY has made a big bullish engulfing candle down here at the bottom of this downtrend, but I still think that it's just a kind of either profit taking or short squeeze, and I don't think that it's gonna continue to rally upwards. I think it's more likely that this is you know, just a kind of squeeze in a continuation downward. So to extrapolate that over to some of my positions real quick, one thing we've been talking a lot about this week is the Swiss franc. And actually, CJ, I did want to get your take on this in a minute, but bear with me. You know, hitting resistance at that 200-day moving average, and that was our initial take profit. So the fact that we are able to, you know, good define risk and target to the upside being the 200-day moving average. It's hit the 200-day moving average and it's finding some resistance there. But now that it's hit the 200-day moving average, I said this yesterday, what I want to see is a candle body close above this 200-day moving average. I think that would be a great indication that we're going to see continuation. And getting back to the DXY, I think if we see the Swiss franc close above the 200-day moving average, it really increases the likelihood of the dollar retracing back towards its 200-day moving average. So I think that that's a really interesting thing to watch out for, is kind of like, looking at some of the underlying assets within the DXY. And I think the Swiss franc is, it's not the most heavily weighted in the basket by any means. It's one of the least weighted, but it is still significant. And I think that if it is able to climb above that 200-day moving average, we could plausibly see the dollar fall back towards its 200-day moving average and really give risk assets room to run. If that were the case, we'd see the NASDAQ and ES really rally. So that's kind of my general thoughts. But CJ, that's a lot of rambling on me. Any thoughts on anything that I said during that rant?
Yeah, the Swiss franc it is down, but the euro and the pound are down twice as much. So
Yeah.
just a note of relative strength or relative performance there. It's quite interesting.
Also, last night, CJ, you had mentioned to me an interesting trading
Yeah.
setup.
Here, I'll bring it up. Yeah.
Yeah, that's what I wanted to toss your way, because I actually really liked. I had been thinking about that, and I was going to ask you about it, but I instead just went with the just straight up dollar pair. But the Swiss franc and the Japanese yen, and that pair. You want to talk a little bit about this and how this could possibly be a means of exposure to the upside? I was going to ask you if there's any COT data available, but I see that this is the CME. So
these are futures data. Well, yeah. So I don't have this ability on my charts. It's actually cool though. In Shapiro's his charts, you can actually cross-reference the positioning between FX pairs. So you actually, I haven't looked at it for this particular data set.
Okay.
But they're both somewhat similar in terms of their positioning.
Right.
Maybe Swiss franc might be a little bit stronger. But like, I feel you have to kind of go with the trend, or at least I would be trend following this asset in a non-crowded market, which this is. And when we have a breakout into new all-time highs, usually that's a good sign for continuation. So not a trade I took personally, but just something that could be an interesting way to put yourself like in a better position of risk in both market environments, because I think this is a trade that could work in both risk on and risk off environments. And I think that's like where the edge is, or where you want to look for the edge. You find that in a lot of the BTC pairs as well when looking at Bitcoin.
Yeah. That's what I was going to say, is like the analogous comparison would be looking at the altcoins via the BTC pair.
Come back to me. I might be able to get that positioning chart for CHF.
Okay. Yeah, for sure. Let's take a quick look at crypto. I mean, not much to say other than the fact that we are continuing to the downside. I think Bitcoin, there's less to say about Bitcoin right now. It's like right in the middle of a range. It could plausibly grind down to 26K, where we could see some buying, but realistically, I wouldn't count on any significant buying to come in. Even if we get positive price action in the equity markets, I would not count on Bitcoin rallying on the back of an equity market rally, because we're seeing extreme weakness right now. Also, there's just a general lack of on-ramps after all the shit show that's taken place in the last year. Like, I said this yesterday, but I just want to nail this point home. If you are someone that is over the age of 50, or if you are running a family office, or if you're running a hedge fund and you want to get exposure to Bitcoin, how do you do it? What do you do? Like, do you go on Coinbase? That's probably the option. So rather than buying Bitcoin itself, why not speculate onto the on-ramps? I think that is a very valid method of trading, and that's why CJ and I have been watching Coinbase very closely. It's kind of like the old narrative of, like, during a gold rush, the person that sells the picks and the shovels gets richer than any of the gold miners. Coinbase, I think, is in that sort of position. But I want to talk about ETH real quick because it is at a what I would define 100% to be a make or break level here. This level of 1545 is exactly where we wicked down to on this day of massive sell pressure. We also dipped down here after the ETF sell-off news. And then we saw a bounce. And now we are dipping below that level, bouncing back. It's going to be interesting to see if this is maintained. I think that ETH makes a move back up towards its 200-day moving average. I think it's not very often that you see Bitcoin and ETH this, this kind of far off from one another in terms of like their positioning around the 200-day moving average and their movement leading up to it. But there's definitely a big difference in the price action of Bitcoin and ETH. And I think that leads for the potential of outperformance from ETH. So if we look at the ETH BTC chart, we look at this order pair. Yes, it is, red on the day, but I still think that there's a possibility of this flipping green on the day, this jumping back in this demand zone, and ultimately coming up towards the 200-day moving average. But again, when you're applying technical analysis to this ETH BTC pair, it's very important to look at the underlying asset itself in the dollar pair first, because this is a make or break level. If this level is broken and the candle body closes below 1545, then basically all bets are off to the upside in my mind. And the ETH BTC pair as well. I think you can kind of negate that trade because this would basically be kind of negative price discovery. And we really don't have that much support until all the way down around the 1500 level, which would be a big hit for ETH. So that's kind of how I'm seeing it right now. I'm still long ETH BTC, full disclosure. But like I said, if this candle body closes today below 1545, I will be cutting that position. Was that enough time for you to bring up your data or data?
No, I didn't get it.
I
was struggling to even bring up some of the other charts that I was about to show. But
what are you doing over there, man?
Anyways.
What do you got for us?
I want to look at the AAI sentiment survey just briefly.
It's been a while since we've taken a look at that.
Yeah, it's been pretty good the last few weeks in terms of like contrarian indicating. Okay, so let's see. Starting in September, people were bullish the month of September. Price went down. Everybody got bearish. Now, since we're starting to trend up after we've kind of put in a bottom, VIX hit 20, equity put call ratio spiked above 1.5. You see people getting more bullish, but it's always just fascinating to me, and I like to look at how sentiment really just follows price. And so I guess when you can kind of compare that to the historical average, you get maybe a better perspective of where we are. For instance, historical averages, roughly 37.5% of market participants say they think the stock market's going to be bullish for the next 6 months. The problem is people will say and do different things. So for instance, maybe they'll say one thing, but that's not truly where they're positioned. That's why I like the COT data so much more. It's very transparent, cuts to the absolute truth. Nonetheless, 40% is pretty high here. So, I remember when we were at Market Rebellion doing this cocktail hour, I think there was like 300 to 500 viewers, and they used to do these polls, and every single analyst was bearish, including myself too. I think I was long puts at the time, and it was the absolute low. We've never traded lower since, and about 80% of or 90% of the viewers were bearish. All of the panel analysts were bearish. I was bearish. And we've never done anything but traded higher since. So we're not at that necessarily extreme level on the AI sentiment survey yet, but I think that maybe something to pay attention to when we do start reaching some of those extreme levels. The thing that's tough about trading right now is because we're at like a difficult point. Like last week, to me, it was very clear that we were at extreme fear. It feels like we're still pretty fearful, but we've just climbed higher, and now people are like, all right, well, maybe we can do it despite all this geopolitical uncertainty and that stuff. So basically where that comes down to my positions and how I think about stuff is that, just to give you a personal mistake of some things I've done earlier this year and stuff that I don't want to repeat. I did take a little bit off Swiss franc yesterday.
Listening to me. That's nice.
Yeah. I mean, sometimes when you got money that's in open P&L, like you just want to take it. But anyways, you know, it's like the DXY, you know, very powerful trend. And I was long the dollar back, like, you know, here. And I think I quit on the trend once we started going up, like right around here. And, you know, I missed all of this upside. You know, we found it in other ways. You know, we shorted, you know, ZL and tried to do other things to play off this dollar strength. But I gave up on the dollar trend, you know, only about end of July, and then missed this entire move all the way through August. So, you know, we'll see if gold does something similar, like if we end up going up towards this $2,000 level, because based on the amount of positioning that would have to unwind, if we do keep going up, that could be a decent target. Being said, I'm not going to let myself just round trip it, but I think that, you know, that can really can go a long ways in your yearly P&L versus like missing or actually riding one of those positions. I totally agree with it. I get the urge to take profit. So
yeah, we talked a lot about that yesterday. If you didn't catch yesterday's show, I think we, you know, got pretty philosophical about about taking profit and when, you know, you should and when you shouldn't be taking profit. But I do think there were some good pieces of information in there. And really, like, you can't be mad at yourself for missing that move in the DXY. Like, yes, sentiment was incredibly bearish when we were at the low and everyone was calling the death of the dollar. I remember you came on every day saying, taking the contrarian view.
It took so long to turn around.
Sadly,
I really didn't make much from it either.
Well, you're still right. Yeah.
In all fairness, let me just you know.
Yeah, I mean, even if you didn't make that much, I mean, you were still right, and like, I think in a lot of ways that was the birth of contrarian CJ. Was that market rebellion?
Oh, I've been an oddball for a while, but it's in terms of markets, yes. In terms of markets, yes.
Yeah, you were born this way. But I'm talking about the markets. And contrarian trading has been, without a doubt, the most profitable trading strategy in this last calendar year. Fading the majority, fading the talking heads on CNBC, all of that has been incredibly profitable. And I think that that's going to continue because, you know, looking at those sentiment surveys is very, very important. Because, you know, if 90% of people get bearish, there's a good chance that the bottom is in.
Yeah, I do believe, I don't have any empirical evidence on this, but if I would have to estimate, I would say the reason why Citadel's best year in 2022, I believe it was their best year. I think they did like 30 to 40%, one of their best years in like 5 years. The reason why I believe is because when they have that pod structure that Ken Griffin kind of like shifts around and he says, all right, you made, you know, 100 million. We're not going to use this strategy anymore because it did really well. The market environment's going to change, so we're going to use something else. Anyways, the whole basis of that business model of paying for order flow, if you're looking, I wish I could pay for order flow. I wish I saw everybody's position on Robinhood. Man, wouldn't that make things easier? But if you saw where everybody was positioned and you just took the opposite side of them, like think about how much money retail traders lost in 2022. Like tons and tons of money. And Citadel basically, I mean, I'm not going to say they took it all, but they took the other side of the position of those retail traders of that flow. So as long as you kind of manage risk and take the opposite of the majority, you make money over time. And you know, obviously contrarian trading is a good strategy. I'm starting to believe it might be one of the only strategies. Actually, never mind. I take that back. For me, only strategy for me that works, but maybe works for you, maybe not. We all gotta kind of find what works for us.
Yeah. I think it works best in commodities markets because when you're dealing with equities markets, there's always like a factor of upward drift that you're dealing with. At least there tends to be. So like over time, it's not as effective to be like just straight up contrarian. But when you're talking about commodities, I think that those, and we've seen them trend for a very long amount of time. I think that applying a contrarian mindset and taking the opposite side of the retail trader when it comes to like commodities and even FX, I think those are the two best means to apply that contrarian mindset.
Well, we do actually have performance data on this. If you use Shapiro's kind of track record of COT and using that contrarian strategy, he does talk about how the best performing sectors have been equities and currencies when trading them based on the COT approach, likely because it's better. They're larger markets, more people in the mainstream are trading them. So you see fade money talking about them a lot more. And when you see fade money, all the panelists saying one thing and then the positioning is saying the same thing, it's like, okay, this is clearly a good setup for risk reward. And then, of course, we talk about energy being the worst performing in terms of like COT. But lately, energy had a great COT trade. So you don't always know. But yeah, it's definitely been really, really well performing this year. I mean, don't forget everybody. There was a tweet or some article that was like forecast 100% chance of recession in 2023 or some shit.
How's that? That's not even a forecast. That's a
certainty. Anytime there's a market certainty, yeah, it's just like. So honestly, this is a great education. If you're a market participant or if you're new to markets throughout 2022, even 2021, I mean, sometimes you got to wait 10 years to experience a cycle like that in equities. And we've experienced one in only the past couple of years. So.
Yeah. And, staying green on the day. So,
Apple is the new flight to safety, evidently.
I mean, hey, that's as blue chip as it gets. I mean, if you're talking blue chip, Apple, Amazon, like I feel like buying Amazon right now, like it's just such a easy and obvious way to make money that it has me reluctant to buy. I want to buy like a call spread.
Every time it feels like that.
I know,
it's a
right?
Trap.
It's a trap. But like, I might just buy some Amazon stock, honestly, and just put it away for the long term. Like the value of their company is tremendous. Like forget all this short-term speculation for a minute. CJ and I were joking about like, how the best returns for crypto would be a cryo chamber. If you had access to that and were able to freeze yourself for 1,000 years, you'd come out a gazillionaire, literally, not even a trillionaire, like Fry from Futurama. But like I think Amazon, like you just buy that, hold it for 5 years, this stock will be going nowhere but up, in my mind. So, stepping aside and stepping back from the short-term speculation of things for a moment, I was just pontificating this a lot last night. Like Amazon, people don't realize how much server costs are. Like they are so, not only are they expensive, but they're important. And Amazon literally owns 70% of the servers that maintain the infrastructure that we rely on every day. So, we talk about Amazon as being, obviously a massive online e-commerce basically the Walmart of the internet. But they're a lot more than that. They're a lot more than that. And they definitely could have a role to play in the future of things like AI, in the future of things like Web3 integration, just because of the amount of servers that are reliant on or that are owned by Amazon.
Yeah, I'm pretty bullish on bald CEOs in general. I think they naturally have a inclination that drives them.
Yeah,
Hence
it's
the
true. That is
Coinbase.
true.
Chris Vincentini is somewhere in the audience smiling to himself.
Oh, yes. Now you're gonna be his target, not me. That's good. That's good. But yeah, bald people tend to be successful. They're overcompensating. Oh man. Okay, that's enough. That's enough. Anything else you want to add today before we wrap things up?
Nah, I think tomorrow will be a more interesting show in terms of markets, and we'll see ultimately how price settles down after this CPI and whether or not people really want to bid this into the weekend. Feels like people might want to de-risk into the weekend, but we'll see.
Yeah, maybe we create an ETF of bald CEOs. That's the way we make it big, because there'd be quite a few blue chip stocks in that basket. But anyways,
no fake bald people either. You got to own it. Like Elon Musk was sort of bald. Now he's not.
Yeah, no,
not going to be in the basket.
Yeah, Elon. Yeah, no chance with your hair implants. You're not fooling anybody. But anyways, I think that's all we got for today.
All right, friends. We'll see you tomorrow.
Thank you for watching Money in Motion. If you want more from Monte and CJ, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description. Thank you, everyone. We hope you have a profitable week.